Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Troy Moling and thanks for joining us today on Market Journal. Good to see you and glad you could spend a little bit of your day with us. Beginning the broadcast, in the USDA's first condition ratings of the season, 76% of the nation's corn is listed as good to excellent. Nebraska and Wisconsin are the leaders in the excellent category with a quarter of the crop under that distinction. In soybeans, 84% of the crop is planted with 62% emerged. I spoke with Jeff Peterson of Heartland Farm Partners on Wednesday to get a better look at the numbers.
A couple things. I think it's this time of year it's interesting to get the crop planted, get it emerged, and we start evaluating that condition. And this week we did get a condition score, as you mentioned, on the corn side. And starting off in Nebraska, 88% good to excellent. And we always put the good and excellent together. That's actually the second best rating we've had for this week, going all the way back to 1987. And when we take a look at the national number, we bring the good to excellent together, 76% good to excellent. That particular rating would rank the fifth highest, going all the way back to 1986. So at least as far as the observers see this crop, we're off to a really good start.
Okay, also talking about the markets, been hearing this term limit up, limit down a lot in our market discussions. Explain to our audience kind of what that means.
Yeah, so the limit trade, we have experienced that a few times, and it's type of volatility that we're having in these markets. So what happens, the Chicago Board of Trade or the Chicago Mercantile Exchange, twice a year they establish the price limit. So on first trading day in May, they can come out with a new limit. First trading date in November, and this relates back to corn and soybeans. So currently on corn, you can trade 40 cents a bushel from the prior day trade, higher or lower, and then at that point they won't let the price move any further. Trade still happens. Buyers and sellers still can trade if they're willing to trade at that price. Now on the soybean side, it's actually at $1 is what our limit is. But actually the thing we have to think about here is that we actually can have expanded limits. So what happens is that if we go up and all, let's say 2 future months are trading up limit and close up limit, then the next day we actually trade expanded limits. And on corn, that would be a 60-cent limit, and on soybeans, that would be a $1.50 limit. And the whole reason for these is the CME looks at it is to give us just orderly trade. They don't want this market to trade too far, too fast, one direction or the other.
Can't be too volatile. And one thing adding to this volatility, the weather, would you say?
We're kind of in a double weather market right now, and let me explain that. We've got the weather challenges that are going on in South America going on. Along with the same time, we've got some weather concerns here in the U.S. Starts off with our drier than normal type subsoil and topsoil conditions that we have in parts of some of the major grain producing areas, Corn Belt in here in the U.S. But then we've also got some hotter, drier conditions in the forecast, and that's all coming together to definitely give us and lend to the volatility.
Yeah, you were talking about South America. Give us an idea of how their safrinha crop is looking right now and how that, I guess, volatility in South America is adding to any impacts for U.S. producers.
Yeah, it's a big deal. And as you take a look at that safrinha corn crop, for Brazil, it's had a tough road. It got planted late because the soybean crop got planted late. So we got to go clear back to last fall when that soybean crop got planted. And then this crop got put in late. And what's a big deal about that is that we're pushing that final fill, when we're going through the pollination stage and filling out the kernels is getting put into a very dry time of the year normally in South America, but then it's been exceptionally dry on top of that. And if you think about it, earlier in the year when USDA first came out with Brazilian numbers, they were talking for all their corn crops about 110 million metric tons. Well, now USDA has them down at 102 million metric tons, which put that in perspective, that's about 4 billion bushels, okay? Now the US this last year, we raised 14.1 billion, so we have a comparison, but it does look like that crop is going to get smaller yet. A lot of the private analysis coming out of South America would say 90 million metric tons, which that's 12 million metric tons lower, or that's about 472 million bushels lower. So as we make that crop smaller, the other important part to all this is the fact that Brazil this year looks like they'd still probably be number 2 on the export side. So whatever they don't end up producing and they don't use internally, then all of a sudden, there's a lot of competition out there that want their corn. If they can't get it from them, then they got to really kind of come to the U.S. or they have to come to the Ukraine. So that's where it comes in for the U.S. producers on the export demand side.
And let's stick internationally, and let me get an idea of China's role in the big picture of everything right now.
Yeah, China, it's really interesting. It's hard to believe. They're actually the number 2 producer of corn in the world, but boy, are their imports really thrown this market a curve. And to put this in perspective, traditionally, they're not a big importer of corn. If we'd go back a couple crop years, they were importing about 7.6 million metric tons of corn. This year, and also forecasted for the 2021 crop year, they've got that raised up to 26 million metric tons. So that's probably over about 750 million bushel increase higher than where they had been at their highest point previously. So what that's doing is that's taking a lot of extra corn from other individuals who wanted to import it. And in addition to that, at a year when we've got tighter supply coming out of Brazil, that makes the tightness on the world stocks even tighter. And what everybody's looking at is they're still wondering, where will it stop? Do they need all this corn, or are they physically putting it in reserves? And because of some changes they've made on their hog herd, I'd say, you know what, a lot of this corn is needed. And the reason that we can say that is as we dig into their numbers, what's surprising when we look across corn, we look across wheat, we look across oats, barley, grain sorghum, this year they're forecasted to use about 260 million metric tons of those grains. That compares to about 218 million metric tons last year. So we're seeing a big jump in their feed demand. So I think a lot of this is real demand for them.
And then looking a few weeks down the road, quarterly grain stocks and acreage reports at the end of the month. You always give us such a good breakdown on this data, kind of a sneak peek on what we might see?
Yeah, so what we're looking for, and that is going to be a big one. All eyes are going to be on what's going on the acres, and we're expecting to see more acres. We actually, compared to where the March Planting Intentions report was at, we'd expect to see probably 4 or 5 million more acres between corn and beans. It's going to be a toss-up between whether it goes corn or beans. We think corn is going to pick up at least 2, maybe 3 million more acres, and the rest of that will go into the soybean side. On the stocks, I think we're going to continue to see the stocks tightening up, probably a little more than we'd expect to see. And so I think that's going to be setting this up to see exactly how's the rest of the summer going to trade once we get those numbers behind us.
Okay, great info today as always. Let's end it with any marketing or risk management advice that we haven't talked about.
I think the biggest thing right now that we hear from a lot of people is that in some areas, they're concerned about making sales because of the fear of not producing that crop. Don't forget you've got your crop insurance there to help you out with that. But the other one is the fear of making sales because they're afraid of missing out on higher prices. So don't be afraid to physically use some of the different contracts that are out there to be able to get a floor in place. These are great prices, and we're going to need to take advantage of them here over the next few weeks.
Next week, we'll be joined by DTN analyst Todd Holtman. So if you have a question that you'd like for me to ask him, email us or get in touch on social media, and I'll pass your question along. Next up, with planting winding down, it's time to start thinking about certifying those planted acres with your local FSA office. The process is especially important because it's required to maintain eligibility for several USDA farm program benefits.
So for anybody who maybe will want to access payments to a number of our programs, they would need to make sure they have their acreage certification turned in by the deadline. And so we're talking about program benefits like payments through the ARC PLC Commodity Crop Safety Net program, disaster program payments in the event that you have a disaster strike where you need to access some financial relief, and even Conservation Reserve Program annual payments. All of those, if a producer is going to access those, would need to have acreage certification complete to maintain eligibility.
Bobbie says that even if you have pastures instead of row crops, you may still need to certify those acres to qualify for things like the Livestock Forage Program.
One of the things I want to especially remind producers, especially those maybe who have pasture but don't necessarily have crops that they plant in the spring, that perennial forage is part of the spring acreage certification process. And, with the potential for drought this year, which I hate to talk about, but it is their potential there. We might have a program like the Livestock Forage Program kick in. And so if a producer wants to access some benefits through that, they're going to have that Acreage certification on file with our office for one of the eligibility requirements. So, just a special reminder for those with perennial forage that they're part of that spring acreage certification as well.
The spring acreage reporting deadline is July 15th. That'll be here before you know it, so be sure to reach out to your FSA office sooner rather than later. And for more information, we've got some links to help you out on the Market Journal website. Next up, livestock grazing currently utilizes approximately 35% of the total land in the continental U.S. While beef cows usually run on cost-effective, nutrient-rich forage such as grass and crop residue, this year it seems forage production is at risk from drought. Market Journal's Bill Dodd spoke with UNL livestock marketing specialist Elliott about why the forage conditions and higher feed costs are causing some producers to consider herd liquidation.
With worsening drought conditions in the U.S., it's important to understand how different regions in the United States vary in terms of their grazing land, as well as their total beef cow populations. With one of the largest swaths of our country's best grazing land facing continuing drought conditions, the implications of partial herd liquidation are becoming increasingly realistic.
About 50% of all the forage and pasture range is actually located in the mountain regions. Different regions such as the northern plains, we have about 15% of all the grazed forage and pasture conditions. And the reason why we generally monitor this is because of two reasons. First, drought implications obviously are a concern. The more drought-affected areas are affected by larger grazing densities, then that's obviously a concern. And second is the USDA reports that come out that monitor grazing and pasture land. They report it by region and also nationally. Over the last couple of weeks, we've seen extremely elevated pasture that's been rated as poor or very poor. And then when you dig down into it, it's because of places such as the mountainous regions and parts of the northern plains that are experiencing large amounts of drought. And that's one of the reasons why they're so elevated.
When it comes to drought and possible herd liquidation, Elliott tells me there are likely implications for both the cull cow market and the feeder cattle market.
Cull cow markets tend to be pretty geographically isolated, which would mean that cull cow culling rates in New Mexico are not really going to affect cull cow rates in Nebraska. So we're not likely to see large impacts for Nebraska cull prices given people's preferences outside of Nebraska for culling. Feeder cattle is a little bit different because there tends to be the theory in economics, what we call the law of one price, which basically suggests that prices should be equal throughout different geographic regions minus transportation costs. So if I could buy an animal in Nebraska and ship it to Kansas, that price differential minus transportation should be equal to zero. If not, we would expect that people would buy animals in Nebraska and ship them and continue to ship them to Kansas. And so it's two implications. First is that feedlots, if there is a partial herd liquidation, feedlots are likely to be able to buy feeder cattle a lot cheaper from drought-affected regions, which would affect their demand for other types of feeder cattle, such as feeder cattle coming out of Missouri or even locally here in Nebraska and as far as potentially Florida. And so it really kind of shapes up into a potentially worse condition given that we have elevated feed prices, which means feedlots are not going to be wanting to place feeder cattle anyways. And so we could see a lot of downward pressure on feeder cattle prices as we move into the really into late summer, early fall.
With the possibility of partial herd liquidation hitting harder hit areas of drought, Elliott had some risk management suggestions for those who may be facing the brunt of any financial burdens brought on from drought conditions.
The first is pasture range and forage insurance, which essentially is a subsidized insurance, and what they pay for you is basically rainfall or precipitation, I should say, which would be rain plus snow. And that is trying to proxy for, well, if you don't get rain, you can't have forage. And what we've seen is that it actually pays out quite aggressively. For every $1 that a producer pays in premiums, it tends to return more than $1 back in indemnity payments. And this is, of course, on average, and different regions will vary. But that provides producers an opportunity to protect forage production. And so in the context of drought, one reason why we might not see herd liquidation is that producers could take the premium or the indemnity payments that they're receiving from pasture range and forage insurance and taking that money to buy additional feed for their animals. And so they're actually able to just transfer payments to retain beef cows. The second would be LRP, which is livestock risk protection, which is essentially it functions as a floor for a price floor. It guarantees a certain price to the producer. And that prevents from, we don't really know what the drought is going to do. We don't know what feed prices are going to do in the future. And really, frankly, we don't even know what the COVID-19 situation is going to be like going into the fall. A lot of uncertainty. And what livestock risk protection does is it puts a minimum price that the producer will receive for their animals. And that provides producers an opportunity to continue to try to maintain profitability moving into the future.
With the long, hot months of summer still to come, now is the right time to be thinking of how to navigate any potential drought-related challenges. Reporting for Market Journal, I'm Bill Dodd.
Thanks, Bill. We've got more information on this topic on the Market Journal website. And sticking with cattle, if you had trouble controlling horn flies in your pastures last year, you may need to redesign your control program. Nebraska Extension educator Dave Boxler spoke with Market Journal's Maddie McIntosh on several different methods of hornfly control and how to figure out which one is best for your operation.
Warmer temperatures means an insect called the hornfly is emerging from manure pats across Nebraska pastures. Thankfully, there are a number of control methods producers can use to keep the pest at bay.
Certainly we have a number of methodologies that have been around for 50 plus years. That would be the dust bag. If you choose only to provide this in a free choice setting, you're probably going to lose anywhere from 25 to 50% in fly control. So forced use is the way to go on this treatment methodology. Back rubbers and oilers have been used for a long time and are still used by a lot of livestock producers. Animal sprays have been used widely, and some producers rely on animal sprays exclusively. It involves a lot of work and possibly stress to cattle, especially under warm conditions. There is another spray methodology called a mist blower sprayer, where you take the sprayer out to the cattle and spray the cattle right in the pasture. And here again, those spray treatments are going to have to be repeated at least every 2 weeks to get to achieve maximum control. We also have pour-ons, and they're really widely used with producers when producers turn their cattle out to pastures. Now, they'll provide about 3 weeks of fly control, and then they'll have to be repeated also. We have a lot of producers in Nebraska using feed-throughs, and insect growth regulators work by disrupting the development of the fly. So the animals will feed on this mineral, it'll go into the system, deposit it in the manure, and it kills the larvae that are developing in the manure. So we do have insecticide ear tags that have been with us for 35 plus years now, and many producers will rely on this fly treatment, and we encourage our Nebraska producers to delay the application of these ear tags until either the economic injury level is reached or make the application in late May or early June. That way you can ensure pretty good season-long control. If you apply those ear tags too early, and some producers will apply them even in late April, why you run the risk of losing or running out of the product when the flies are really increasing in population, and that would be in late August or early September.
The previous methods have been shown to work, but Dave says there's a newer practice that producers should consider as well.
Compressed air application. And compressed air propels a capsule with insecticide, and it is applied to the animal in that fashion. And that will provide anywhere from 21 to 28 days of fly control. So that's an option for some livestock producers who do not have access to, say, panels or a corral system where they can bring the cattle in to spray.
Reporting for Market Journal, I'm Maddie McIntosh.
Thanks, Maddie. There is some concern about the hornfly's resistance to certain insecticides, so be sure you're paying attention to all labels and application instructions. We've got more information on this topic on the Market Journal website. Next up, back in 1955, Nebraska had a total of only 11,500 irrigation wells across the entire state. But fast forward to today, and that number is over 100,000, making Nebraska the most irrigated state in the country. While the counties that were heavily irrigated in 1955 are still among the most heavily irrigated today, the efficiencies and technology used to deliver water to our crops have been revolutionized. That includes center pivots and new variable rate irrigation technology that conserves every drop of water possible and gets water where and when it's needed in fields so crops can optimize its use. Learn about the evolution of Nebraska irrigation and irrigation wells in the June issue of Nebraska Farmer. Time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Al, we always love to hear what you have to say, but this time of year we are especially interested in the weather. So what's the forecast look like?
Well, that's right. You're exactly right. We're moving into June. Now is the time when the crops start to use some water, and it'll increase only as we go through the month of June and into July. So the weather becomes very critical at this standpoint. In this last week, of course, we've seen the cooler weather during the Memorial Day weekend with from off and on again rain through central and western Nebraska. A lot lighter precipitation amounts, unfortunately, in eastern Nebraska, and particularly in extreme northeastern Nebraska, where we've had some little small pockets of exceptionally dry conditions. The weather looks a little bit more promising as we get out into the middle of the month, but if you're enjoying summer temperatures, which we haven't seen a lot of during the last 10 days, this is the type of forecast you really want to pay attention to. So we go the upper air miles. The first thing I'll draw your attention to is that we've got this Big Bridge over top of the eastern two-thirds of the country with a trough out in the Pacific Northwest and a little persistence of an upper air low hanging around southern Texas. At the surface, we have a low pressure system in eastern Montana, high pressure over the central Rockies, just an absence of precipitation expected in the central plains as most of the moisture will be concentrated along the Gulf Coast. As we go into tomorrow, some of that energy from that trough tries to slip across the northern plains, pushes the air mass a little bit farther to the south, but for here in the central portion of the country, looks like sunny skies will be in store, maybe an isolated thunderstorm during the heart of the day, but we're still going to be looking at temperatures in the upper 80s to the low to mid 90s across the southern part of the state. By Monday, that trough doesn't move a lot, tries to make some energy up into the northern plains, shoots out a couple pieces of low pressure over northern Wyoming and southwestern South Dakota, at the same time pushing a weak front through the state. So we may see some thunderstorm develop along that front, although it doesn't look to be widespread. By the time we get to Tuesday, that ridge starts to reestablish, building back up toward the north. That digs that trough out to the west a little bit farther south. But really all we're going to start to do is start to see moisture really evecting toward the north, getting very humid across the central plains. But again, most of the precipitation stays to our south. By the time we get to the middle of next week, though, that trough looks like it wants to dig a little bit farther toward the south. That's really going to pump up the moisture into our region. So it's going to get very sticky, very humid as we see temperature in the upper 80s to low 90s. And of course, we start to see some of those air mass thunderstorms developing during the peak heating of the daytime. As we go into Thursday, that trough itself starts to break down and slightly shoot some energy up into eastern Montana. So we do expect to see some precipitation across the northern Rockies and in the southern portions of Canada. But here in the central plains, most of the moisture will be basically from the Gulf streaming northward. So it's just basically heating of the day. On Friday, once again, that ridge tries to build back in. That trough remains persistent in the west. another piece of energy shoots out of that trough, maybe generating some thunderstorm activity across extreme northern plains, more isolated across the central United States. If we look out a little farther into the future with this drier forecast, at least starting to the month of June, CPC issued their month of June forecast for temperature and precipitation. And before we get to that, we do see above normal temperatures for next Thursday through the following Tuesday, so you kind of get in store what I'm going to get at. Below normal across the southern portions of the plains region where we have that persistent upper air low that's basically parked over southern Texas. In terms of precipitation, with that ridge out west, still continuing that into the end of next week, there are some signs that maybe this will break down as we get into the mid-month period. We'll wait and see. But as we go even further into the future, and this takes us for the full entire month of June, CPC is indicating the core of the high pressure over the western United States, mostly warm above normal temperature across the northern plains, and a lot of that due to the surface drying from the drought, persistent cooling to our south. And in terms of precipitation, with that dryness over the northern Rockies the first 10 days of the month, it looks like they want to spread that out into the western portions of the state. Again, most of the persistence with this above normal moisture to our south is due to the upper air low.
Thanks, Al. Finally today, and this sounds like a lot of fun, Concord's Haskell Ag Lab will be hosting their annual Family Field Day. This event is free and open to the public and will have an array of researchers and Nebraska Extension professionals on site to answer any of your questions. You can also check out the mobile beef lab and hear presentations on topics including land values, nitrogen management, grain marketing, and more. Extension's Leslie Johnson says there's something there for everyone.
Our focus for the field day is really getting people familiar with science and agriculture at all ages. One of the big things that we like to do with this particular field day is really highlight the programming that's going on at Haskell, as well as other university programming that's happening in the northeast part of the state.
The event takes place on Wednesday, June 30th. Once again, it's free and lunch is also going to be provided. We've got more information on the Market Journal website. That's going to do it for this week's show. If you missed a story, be sure to download the Market Journal mobile app, or you can follow us on social media to join in on the conversation. Next week, learn how a cyber attack on the world's largest meat packing company could affect day-to-day cattle operations and the markets as a whole. Plus, DTN's Todd Holtman joins us to discuss the latest in corn and soybeans. Hope to see you right back here next time. I'm Troy Moling. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.